Okay, everyone. Now we are starting with the revision of chapter number 7, that is completion and review. चालू करते हैं इसको अच्छे से. It's a very nice area. It has 6 standards basically. ऐसे 560, 570, 580. ऐसे 260, 265, and 450. These are the 6 standards which are there in this chapter. Okay, completion and review. Let's do it one by one. We'll take the big ones first. तो पहले कमेंट करते हैं यहाँ पे. That is in relation to your subsequent events. Okay, now subsequent events, the flow of all the answers is given here. You can see on the screen, and we'll just use this and you use it as the base and keep referring to a diagram which I've given you in the class, and उसके साथ पढ़ते रहना. You will understand very quickly. First, what is the definition or meaning of a subsequent event? Sir, any event occurring between the date of the balance sheet and the date of the auditor's report is basically called as a subsequent event, or any fact that become known to the auditor after the date of the auditor's report. And had the auditor known those facts, अगर auditor को पहले पता होता तो, had the auditor known those facts on the audit report date, it would have made the auditor to amend the auditor's report. इस तरीके से that is the definition or the meaning. Okay. Next is what are the examples of case 1. So in case 1 we are done. If you examples of case 1 we have taken the marking in the book. And case 1 कब होता है यहाँ पे? Case 1 happens when conditions exist on the balance sheet date and additional evidence regarding those conditions take place, and the auditor and the company comes to know about it between the date of the balance sheet and the date of the auditor's report. In that case, the company has to adjust the financial statements. That is called case 1. Case 2 अपन ने क्या किया था यहाँ पे? Case 2 was when no condition is existing on the balance sheet date and a new event arose between the date of the balance sheet and the date of the auditor's report. In that case, the company will have to disclose the matters in the financial statements. Whenever the matter is of case 1 or case 2, case 1 का matter हो गया या case 2 का matter हो गया, in that case the auditor has to do 3 things. The auditor has to understand the procedures adopted by the management to identify those subsequent events. Auditor has to read the interim financial statements, read the minutes of meeting, and the auditor has to inquire with the management, and of course if they're required, then also with the TCWG he should inquire. Okay, that is basically this matter that is in relation to the audit procedures. Next, I got what is case 3 now. Case 3 क्या था अपने case में? Just try to recollect. An event may have occurred between the date of the balance sheet and the date of the auditor's report. That can be case 1 or case 2 वाला matter. Some matter has happened between case 1 and case 2. But unfortunately, the auditor came to know about this only after the audit report was issued, but before the financial statements was given to the shareholders. So after the audit report was issued by the auditor, but before the financial statement was issued by the shareholders, in that period, the auditor came to know about this matter. He became aware of the fact that such event had happened. So the auditor did not know about this. In that case, what will happen is the auditor will have to confront the management and speak to the management and ask the management why they did not tell the auditor and why the management has not done the adjustment in the financial statements in the case of case 1 or disclosed in the financial statement in the case of case 2. That is basically your case 3. Simple to understand this point. Now, case 4 क्या था यहाँ पे? Sir, if case 1 or case 2 event has happened between the date of the balance sheet and the date of the auditor's report, and the facts became known to the auditor after the financial statements were issued, means audit report auditor ने issue कर दिया था, उसके financial statement भी issue हो गए, तो shareholder के पास घर पे financial statement पहुंच गया यहाँ पे, and after that the auditor came to know that there is a matter which is there and which had occurred between the date of the balance sheet and the date of the auditor's report, and the management had not given the required adjustment in the financial statement or required disclosure in the financial statements. Then again in this case, the auditor will confront the management. तो confront case में उन्होंने यहाँ पे 3 common points दिए. पहला common point है यहाँ पे auditor will discuss the matter with the management. Auditor will determine whether the financial statement required any kind of disclosures, and the auditor will ask the management how they are going to address this matter, how they are going to solve this matter. That is what the auditor will speak to the management. These are the common points for case 3 as well as case 4. Now in case 3 there are some uncommon points also. Uncommon points कैसा आएगा यहाँ पे? Very simple है. Auditor will have to carry out his audit procedures. He will extend his audit procedures to the new audit report date, and on the new audit report date, the auditor will issue the new audit report, of course. Okay, he will issue the new audit report. Now, the new audit report can be given in 2 ways. Either you just add another date and add a date and then give the data there regarding the new changes, or what you can do is simply you can create a new report and give, and you can mention in the emphasis of matter paragraph or in the other matter paragraph, like that also you can do. So if somebody in the exam asks you case 3, so you'll write the 3 common points that I discussed with the management, determine whether FS require any amendment, and inquire with the management how they are going to address the matter. These are the 3 common points. Along with that, you will write the 3 uncommon points also. What are 3 uncommon points in this case? That is, audit procedures will be done, extend the audit procedures to the new audit, extend the audit procedures to the new report date, and issue the new audit report. That is what you will cover in the case 3 audit procedures matter. Okay. Now, before I go into case 4, if you look at the screen, there is a matter which is discussed here. See, if there is a restriction on the management regarding amendment or restriction on those on those responsible for approving regarding the amendment, auditor's procedures shall be restricted to either. So auditor, in this case, if some restriction is there on the management or those who are approving the financial statement, if they are under some restriction regarding any amendment, auditor's procedures will be restricted to amending the auditor's report to include an additional date restricted to that amendment. So just add a date to your existing audit report, or provide a new or amended auditor's report including EOM or OM paragraph along with reasons. So it depends on the situation that the auditor is in. Okay, that is basically this point. After that, we have your case 4 matter. So in case 4, we did in a much more bigger way. So in that, again, the 3 common points were discuss the matter with the management, inquire the management whether FS require any amendment, and determine inquire the management how they are going to address this matter. Along with that, there were 5 uncommon points. So what are the 5 uncommon points? उसमें से भी 3 जो थे वो अपने पहले देख लिए थे यहाँ पे. We'll do those 3 first. Auditor will do the audit procedures. He'll extend the audit procedures to the new audit report date, and he'll issue the new audit report. Now, auditor will also take steps to see whether management is addressing the shareholders or not. Now, when the auditor takes these steps and to see whether the management is taking the steps to address the shareholders or not, and if the management is not taking those steps, auditor will confront the management and the TCLOG that क्या कर रहे हैं आप, मतलब आपने बताया था कि you are going to go and inform the shareholders, but you are not informing. What are you doing? And if they still don't take any steps, then the auditor will seek to prevent reliance on his audit report. Auditor ये नहीं चाहेगा कि shareholders उसके audit report को गलत समझे. Auditor will disassociate with the entity first, and then he will seek reliance to prevent, he will give a notification to prevent reliance on his audit report, so that the shareholders do not rely on his audit report. In that case, it is given. Okay, that is basically this part. Other than that, of course, the auditor can give the audit report, new audit report. If the management gives you all the information, in that case, the auditor can give the audit report along with the new date in the audit report, or with the emphasis of matter paragraph or other matter paragraph. Okay. Now, this for us completes essay 560. Essay 560 ka the crucial part is that diagram which we did. The diagram becomes very, very important. So do that properly. Okay. Let's go further. Let's go to the next area. Now we'll enter the next part. That is, personally, if you ask me, my favorite standard. It is called going concern. So let's do this going concern. Let's see this. Let's start going concern. Okay. Let's go for it. Now going concern. Going concern is what? Normally we assume that the company is going to continue as a going concern, but because of circumstances, if the company is not able to continue as a going concern, it means they are not going to continue. There is a doubt that they will continue their business after a certain point of time, or if the company may not continue in the foreseeable future. In that case, the company should inform the shareholders properly. So the main matter comes here that the management of the company, go to the main diagram again, see, management of the company has to make the assessment regarding the going concern, and the auditor will evaluate whether the management has done the assessment correctly or not. This is what will happen. Okay. Now the first question is factors relevant to the management assessment of going concerns are how will the management assess the going concern. So management will first look at the past business of the management, that is called SICONACO. SICONACO, if you remember, size, complexity, nature and condition of business. Size, complexity, nature and condition of business. You should also realize that whenever the management comments on the future, it is commenting based on the information available. So information available, based on that, they will make a judgment regarding the future. Finally, the uncertainty degree increases the more further you go into the future. So whenever the management is going to give their comments regarding the future of the company, they'll always specify the period. Example, they will say for the next 3 years, that is for the year 24, 25, 25, 26, 26, 27, our opinion is so and so. They'll always specify the period. That is what they have said here. These are the factors relevant to the management assessment of going concern. We'll look at the past, present and future. Next is auditor responsibility or objective with regard to going concern they have given. So what are the auditor responsibility regarding the going concern? Very simple. auditor has to first see the management assessment, whether the management has done the assessment or not, and auditor should see what he feels about the management assessment. What management has done the assessment, what he feels whether the management has done the right assessment or not. I'll give you an example. Let's say there is a 300 crore rupee loan sitting on the company's head. Okay, and the management of the company here is saying that no, we'll still continue as a going concern, and we'll tell the bank we'll pay later. But we know for sure that the bank is not going to give a extension on the loan, or the bank is not going to give a renewed date for the loan. Bank will definitely say, tell the company, if you don't pay the loan by so and so date, we are going to seize your assets, and whatever asset you have given as security, we are going to take it away. Now, in such a situation, if the management is still very positive and saying that no, we'll continue, then the auditor has to show the reality to the management, and especially to the shareholder, that see, we don't think the company is going to continue, and that is what I feel as an auditor. So first point is, what are they saying? What is the management saying? Second is what we feel as the auditor, and we'll report if there is any difference. That is the auditor responsibility or objective with regard to going concern. Let's go to the next area. This is a very nice one. Let's see this area now properly. Evaluating the management assessment. So in this case, you will see that management assessment management will assess regarding few matters. That is, first of all, always remember, it is not the auditor's responsibility to check or rectify if management has not done the assessment. If the management has not done the assessment, it's the management's fault. Okay, and auditor will tell the management only once to do the assessment. Auditor will not run behind the management and tell the management, please do the assessment again and again. So it is not the auditor's responsibility to rectify the management. Second, management, when they make the assessment, and you understand if the company has a history of profit, if the company is earning very high profit, example, take Reliance Industries Limited, then think think with common sense. Will the management be getting too much into assessing the going concern, whether it will continue or not, or will the management just do a surface level checking? Management will just do a surface level checking because they have a history of profit. In this case also, if the auditor also has good amount of evidence based on his evaluations that the company is a very good company, in that case the auditor will also show more, he'll rely on the management's assessment more, and the auditor may say that okay, the management assessment is sufficient and the company will continue as a going concern. Okay, and the third part, the auditor has to see whether management, or whatever management has done the assessment for going concern, auditor has to assess for that period for sure. By chance, if the management has assessed for less than 12 months, then the auditor should tell the management, please make the assessment for minimum 12 months period. Okay. Let's go to the next area, that is events or conditions that cause a significant doubt about going concern. This is our favorite answer, Jeene ke hai char din, that song. Okay. So let's sing the song together. You can open your book and we'll go into that song. Let's start. Net liability or net current liability position, fixed term borrowing, approaching maturity, short term borrowings to finance long term assets, indications of withdrawal of finance statement by the financial support by the creditors, negative operating cash flows, adverse key financial ratios, management intentions to cease operations, loss of key management, loss of KLMFS, labor difficulties, shortages of supplies, highly successful competitor, regulatory cross-pending changes, uninsured, underinsured catastrophes. Correct? Okay. So in events or conditions, you have first is what are the financial indicators, what are the operating indicators, and what are the other indicators. In the exam, I've told you separate questions can come. If they ask you financial indicators, you have to only write about financial indicators. If they ask you operating indicators, only operating indicators. If they ask you other indicators, only other indicators. Best thing for you is that it is part of the song. You have to just break the song and you have to see, okay, from here to here I have to write. Okay. Example, from the beginning till ratios, that is the financial indicators. There are management intentions till labor difficulties. That is basically your highly successful competitor, correct? So labor difficulty after a highly successful competitor, that is your operating indicators. And others, in others you will get from that regulatory cross-pending changes till uninsured, underinsured catastrophes. Okay. Next one. Examples of audit procedures when event or conditions have been identified that affect the going concern criteria. Our favorite story is here, 4 friends near the river story. Remember the story? So in this case, what we had done, we had seen, in this part, 4 friends go near the river. River has a good flow, so cash flow, profit, other event forecast will come as a point. After that, we had done, sir, in that case, one friend talks about this news, that is later information he keeps giving. So latest information in the interim financial statements. Then one friend tells, oh, you keep telling all this news and all, you remove your dabba. Dabba is what? Debentures. Remember debentures and loan agreements, correct? After that, we had done the next point, that is in relation to, they all enjoy that idli for 1 hour, that is minutes of meeting. After that, one friend, after eating idli, he says, no, I want to become a lawyer, so we'll say, enough. Then after that, that friend goes at 4 kilometers per hour, comes back running at 40 kilometers per hour because parents are here, the fathers are here, remember? That is your related parties and of course the third parties that we had seen. Then after that, we had done that each, father of those 4 friends are standing in front of each of those, each of their children. So father, the father of, let's say, A is standing in front of A, father of B standing in front of B, like that we had seen father of C and D standing in front of each other. Now after this we had seen the father of A tells, you have left my dream unfulfilled. Okay, so the unfulfilled customer orders. The second father says that we have taken a loan from the bank, so it is borrowing. Third father says, you meet me later, I'll give you action. Remember action? That is basically your subsequent events and regulatory action. And last father, what he says is that he throws the child in the river only. If you remember the story, it was planned disposal of assets. Okay, so that is basically this. That completes our this area regarding examples. Remember the key word here is examples. Okay, so example, just remember here. Next, additional audit procedures when events or conditions are identified. So when the auditor identifies events or conditions, what are the additional audit procedures the auditor will do? Okay, so in this we had seen the auditor will first see whether the management has done the assessment. If the management has done the assessment, well and good. If the management has not done the assessment, the auditor will request the management to make the assessment. When the management gives the management plans, the auditor will see whether the plan is improving the situation, whether the plan is feasible or not. Okay, so that are 2 points that you must have made about the word management plan. After that, we saw whether the auditor will see whether the cash flow statement is there in place. Regarding cash flow statement, you will see whether the cash flow statement is having adequate support and whether the cash flow statement is, first of all, reliable or not. That is what the auditor will check. Auditor will then see that whether the written representation has been given by the management regarding all these matters. And last but not the least, if from the previous assessment, if the next assessment is done after a long time, then the auditor will see whether if any changes are there from the previous assessment to this assessment. That is what the auditor will check. Okay, that is basically this point here. Next area we are going to go into in going concern, that is in relation to, just a second, that is the reporting part, and reporting part is very, very important. I'll show it to you on the screen. Just a second. Okay, remember this answer. This is your adequacy of disclosures when events or conditions have been identified and events and conditions have been identified. So adequacy of disclosures means in this case we are checking whether management has given enough disclosure or not. So in this I always ask you a question, and this we did in the class. Remember, lagi hai means are you hurt? If the answer is yes, then you'll ask takleef hai, are you in pain? So lagi hai means are you hurt, and takleef hai means are you in pain. Now, lagi hai basically when we did that, that was basically connected to any events or conditions that are identified. And takleef hai is we are seeing whether the company is leading to any material uncertainty regarding going concern or not. Now, if lagi hai is ha and takleef hai is material uncertainty is not there, it is no. In that case, go to the right hand side of the screen, you will see there. You will evaluate whether as per AFRF, FS contain the required disclosures regarding that matter. Okay. In this case, I told you in the class that regarding a small child and the mother's example, the small child comes from school and the mother will ask, lagi hai, are you hurt? The small child will show his knee and say, yes, mother, my leg is, I have hurt my leg. Mother will ask, is it paining? The small child will say, no, it is not hurt, it is not hurting. He will just scrub it off and he will say, no, it is not, I am not in that much pain. In that case, the mother will simply ask the child, what happened? Did you fall down anywhere? And the child will just simply give a disclosure. Yes, I was playing with my friends, I fell down. That is a simple disclosure. That is basically this when takleef is not there, when material uncertainty is not there. But when material uncertainty is there, if the answer is ha, in that case, now it means that the boy is in severe pain. In that case, you have to give adequate disclosure. Now come to the company's angle. If the events or conditions are there, and if material uncertainty is also there, that the company may not continue as a going concern, the two headings that you will remember is adequately disclose and clearly disclose. In adequately disclose, you will the company has to disclose the events or conditions that are causing these issues, and the management plans to deal with these events or conditions. And the management has to clearly disclose the material uncertainty. What is that the company may not continue as a going concern, and also mention clearly that the company may be unable to realize its assets and its liabilities in the ordinary course of business. Basically, they will not be running the company in a normal manner. They'll have to record the financial statements now at the net realizable value, and the company his intention will be to sell off the assets as early as possible and to pay off the liabilities. Okay. Let's go to the next area. Let's see this. Now the last answer in going concern was this implications on the auditor's report, if you remember this area. Now in this I told you, see, in that I told you, and we had done a hand action in the class. If you see, this is the financial statements, what they are reporting. This is, sorry, the books of account of the company and the financial statement that the company is showing. In that they are writing that the company is going to continue as a going concern. Whereas we feel that the company may not continue as a going concern. So we feel the management is inappropriate in its judgment. If the management is inappropriate in its judgment, in that case, the auditor shall express an adverse opinion. Next, if you remember, we had done this. Remember, if the company is continuing as a going concern, and there is a material uncertainty which exists, Now, in this case, if the management discloses the material uncertainty in a very clear-cut manner, then that is a good thing. We'll appreciate the management. We'll give an unmodified opinion. And in the material uncertainty related to going concern paragraph, we'll draw the attention of the shareholders and tell them, see, management has given the disclosure, read that disclosure very, very carefully. And also, we will say that just because we are giving this, we are telling you to go and read the disclosure, doesn't mean that we want to give a modified opinion. Our opinion is still unmodified, not modified. Okay. So just because we are giving the shareholders, we are telling the shareholders, please go and check the notes to accounts, doesn't mean that we are highlighting anything wrong done by the management. We'll give a unmodified opinion. Okay. Next is connected to this part only. See, if going concern basis, if going concern basis of company is appropriate, but material uncertainty exists, but the management has not given the disclosure regarding material uncertainty, In that case, we have the next part, that is basically this. Adequate disclosure of material uncertainty is not made in the financial statements. In that case, the auditor will give a qualified or adverse opinion, and he'll give the reason for this in the basis for qualified opinion or the basis of adverse opinion paragraph, as the case may be, and he'll clearly say that the financial statements do not adequately disclose the matter properly. Okay. Let's go to the last part. Suppose the management is unwilling to make or extend the assessment. See, management, if they don't make the assessment, then in that case we don't have any information only. And tell me, if you don't have any information, it means you will not reach the RL level. If you don't reach the RL level, please tell me this. You will give either a qualified opinion or an adverse or a disclaimer of opinion. Qualified opinion, when will you give? When material uncertainty is, when material misstatement is there, but it is not pervasive. And in in a disclaimer of opinion, when do you give? When you don't have enough evidence to give your opinion. So basically, when you think that material misstatement can be there and the matter is pervasive, in that case you will give a disclaimer of opinion. Very, very clear. That completes this part. With that, we complete our SA 570 area. Okay, very, very simple. Okay, let's go further. Now I'll take you to the next standard which I want to do, which is covering this 500 series first. So first we'll cover this 500 series properly, and we'll cover the next standard also. That is SA 580. So we'll cover SA 580. Just a second. Let me just open this matter for you. Just a second. Okay. This is the flow of chart that we have done in the class. So I'll just show this to you all. Just a second, please wait. Okay. Just a second. Okay. So we have done this part. Okay. That is a written representation. That is SA 580. So what does SA 580 say? So let's do it one by one. Okay. First, what is written representation? Written representation is any reply given to the auditor by the management to confirm certain matters or to support any other audit evidence is called written representation. The obvious things that the management has to give to you, that is financial statements, your invoices, bills, vouchers, receipts, any supporting books and records, all these are not written representations. Written representations are those regarding which the auditor has obtained audit evidence, and auditor simply wants to confirm his evidence from the management, confirm regarding that evidence from the management. Or if the auditor wants to seek some other audit evidence regarding that matter to support the evidence that he already has, then that is called as written representation. Okay, first that is written representation. Second, so management from whom the written representation is required, we'll take it from the management who have knowledge about that matter. So we'll take it from them. Third point is, what is the objective of the auditor? In this I told you, see, first the auditor will obtain the audit evidence. So this is a pre-requirement. Now what are the objectives you will see here? Auditor will obtain the written representation. Auditor will see whether the representation support the audit evidence and whether it confirms certain matters. And the auditor will then give an effective response. So then the auditor will respond to that. Okay. This is also what we had done in the class. Then after that we had done the fourth one, that is areas covered by written representation. So written representation will cover three areas in a major manner. So I'll show you this to you in the chart. Just a second, please wait. Okay, let's see this. So what are the major areas covered by written representation? The first area is the preparation of finance statements. So auditor can ask the management, and you will understand this is a much more generic question that we are asking the management. Confirmation of fulfillment of the management responsibility in the following areas they have given. So the first question that we are asking is, see, whether finance statements have been prepared as per AFRF or not, please give us in writing that you have done that. So the management will give us that in writing. That is the written representation you are taking. So the management has taken the work of a management expert. Then we will prefer taking the written representation from the management expert. It can be any, see, they are given the example below in those 3 bullet points. Any actuary responsible, any staff engineer in the case of any, let's say, engineering matter, or in the case of internal counsel, in the case of any legal matter, okay, internal legal counsel in the case of any legal matter. So we'll take the information from the management, okay, from the management's expert in this case, okay. Let's go further. That is this. The auditor has to take the written presentation from the management, and the management will reply saying that we have given all relevant information and access as agreed in the terms of the audit engagement to the auditor. That management will give in writing and tell the auditor, yes, whatever we agreed, all relevant information and access we have given to you. And second, the management will also give us in writing as a confirmation saying that all transactions have been recorded and reflected in the financial statement. So basically, whatever transaction happened in the company, they have noted it down and they have informed the they had shown in the books of accounts, and that books of accounts have been given to the auditor. Okay, so that completes this part. That is in relation to the areas which will be covered in the written representation. Now what we are covering is, in this case, I'll just show you this answer first. Regarding which other matters can the auditor take representation, and this will be a much more specific area. For this, my dear student, we have taken a code called scalar, if you remember, okay. In scalar, we had seen the selection and application of accounting policies. Regarding that, we can question the management. So regarding the carrying value of an asset or the classification of asset, regarding that, we can ask an information. Example can be whether the investment that is done by the company is short term or long term. That can be a question that we can ask. Then whether the any assets, if you have seen in your notes, you must have written a code called PLET, P-L-E-T. Regarding the assets, we'll look at the assets pledging, asset lien, asset encumbrances, and asset title. Please tell me again: asset pledge, asset lien, asset encumbrance, asset title. Regarding that, we can ask a question to the management. You can see these are more specific than what the earlier answer was. Earlier answer was in relation to the financial statements, overall basis. This is regarding specific matters. Next, after that, you had the next point, that is in relation to liabilities, whether they are contingent liability or actual liability. Contingent liability, as you know, goes in the notes to accounts, but actual liability, it will, or for which you create provisions, it will go in the liability side. Okay. And the last point is aspects of law, regulations, and contractual agreements. Regarding those, if the auditor has any questions, then the auditor can pose it before the management and take a reply from the management. So we'll get a code here called scalar, very simple code, and regarding these matters, the auditor will question the management. Okay. Let's go further. Now we have done one more answer here called written representation about specific assertion. That was, in my opinion, a very good answer, because in this case, after obtaining the written representation, you are evaluating and making a judgment regarding the management's thought process. Okay, so when obtaining the evidence about or evaluating the judgments and intentions, the auditor may consider one or more of the following. So they are given the points here. You will remember a code called praise. With P, first you have past history. So in the past, what has the management done regarding a particular matter? Let's say the auditor is asking the management and confirming regarding the accounting policies, let's say regarding depreciation method. So you will see in the past which depreciation method the company has used. That is called as a past history. Second, you will check the reasons for choosing SLM depreciation and not WDV depreciation. That is called reasons. Why the management is choosing SLM depreciation? That is called reasons. Third, in the past, when the management has selected any depreciation method, has the management stuck to it or has the management kept on changing it? That is called ability to pursue a specific course of action. So when the management decides something, suppose they say that with this asset we are going to follow SLM method of depreciation, are they going to stick to it or not? That is ability to pursue a specific course of action. And last point, whether because of existence of any information that with the auditor means extra information, or because of lack of information means auditor does not have the information, the auditor's opinion may be inconsistent with the management judgment or intent. That is what the auditor will take care and think about. So we'll get a code there called praise, C, past history, reasons, ability to pursue a specific course of action, and I is inconsistency. Okay, inconsistency with management judgment or intentions. Okay, that completes this area. After that, we had done 2 more answers, but before that, I'll just complete this small part. Remember, this was your date and the period covered by written representation. So in that, we had done this Kamlesh and Shalini example, if you remember. In this case, I told you that in the company, if Kamlesh is the director of the company for that period which is marked in red, and Shalini is the director of the company, or let's say the finance director of the company for the period that is marked in blue. Now, if I am the auditor, I have written there KS means Karthik sir. If Karthik sir is the auditor in this case, and when I am doing the audit, and where I put the tick mark on the right hand side, if you see there's a small tick mark, on that day I came to know something regarding that black dot day. Can you see the black dot on that line? So on that black dot, on that tick mark day, I came to know something about the transaction that happened on the black dot day. But the thing is that Kamlesh has already retired from the company, and Kamlesh is now chilling in Goa. You can see that I've written Goa there. Kamlesh is now chilling in Goa. So in that case, the auditor should ask question to who? Should he ask a question to Shalini, or should he ask a question to Kamlesh regarding that day of the tick mark where the auditor gets the information? In this case, the answer is the auditor will ask Shalini the question because she is the current management. So here you will not bother Kamlesh. You will say, sir, but the black dot is following in Kamlesh's area. Kamlesh's what you call period. In that period, it is falling. But still, Kamlesh has now left the company and Shalini has now taken over. So Shalini should have the knowledge for that entire period, that is for that year for which we are doing the audit, and we'll take the information from her regarding that matter. Okay. So just ensure that you are doing this area which is mentioned in bracket on this slide very properly. Let's go further. Now we enter the next part, that is this. I like this answer. This is called doubts as to the reliability of written representation. If the auditor has any kind of doubt regarding the reliability of written representation, in that case, the auditor will do what? So first of all, the auditor will always, before starting the audit, and as humans, you make judgments about different persons, correct? So at the beginning, you will make a judgment about the dice common of the management or the TCL, whoever it is. So you will judge the dice comment. Dice comment means what? Diligence, integrity, competence, ethical values, then commitment of the management to these principles, and their enforcement of these within the organization. You will first have a opinion about this yourself. Now, if the written representation that the management is giving you is inconsistent with the other audit evidence, then in that case the auditor will have some doubt, but he will not blame the management directly. He will attempt to resolve that matter by himself. If the matter still remains unresolved, now the auditor will feel that management is lying to the auditor. And if that is the case, then the auditor will think, oh, if the management is lying, can lie to me right now, the management can also lie to me, must have lied to me in the past also. So the auditor will reconsider his assessment of dice common, that is diligence, integrity, competence, and ethical values. Their commitment to those and their enforcement of those, the auditor will again doubt that. If the auditor concludes that the written representations are not reliable, the auditor shall take appropriate action, including the possible effects of reporting as per SA 705. In that case, it will go ahead in this manner. Okay. There is doubt as to reliability of written representation. Let's go further. That is this. If management does not provide one or more of the requested written representation, the auditor shall do what? See, if the management is not able to give the written representation, the auditor will discuss the matter with the management, reevaluate the integrity of the management and the effect that it has on the reliability of the representations, oral or written, received till now, and the audit evidence in general. See, again, if the management is not providing data, you will discuss with them, and after a point of time, you will also lose patience and you will reevaluate their integrity, and you may think that, okay, maybe management is not that reliable, or whatever evidence they gave in the past is not that reliable. It is not reliable. If the auditor is it is confirmed to the auditor that the management is not giving auditor any information and the auditor cannot trust the management, then the auditor will take appropriate action, including speaking to the TCLOG and other parties. And finally, if they also don't satisfy the auditor, then the auditor will report as per SA 705. That is how it is covered. Okay. So we completed 3 standards now. That is SA 560, 570, 580. If you ask me, 3 top quality standards. Okay. Study this well. Then we'll continue in part 2 video of this chapter. We'll complete the balance. Small 3 standards will cover. Okay. That completes our chapter number 7, part 1.